Traders lose money not because their strategy is bad, but because they entered too early. What if I told you you only need one confirmation to stop your overtrading and start entering like a sniper? Now, in this video, I'm going to show you the only confirmation I personally wait for before entering any trade. If you master this, your entry will never be the same again. Now, when talking about the entry, let's talk about how to get it set up. Just very easy, random analysis. You understand? So this is it now. This is a 4-hour candlestick, and you can see that this is a bearish candlestick and this is a bullish candlestick, forming our what? Our candle range theory. I taught you guys about candle range theories in my previous video. Go and learn it now, okay? And that is what we are using for this particular example. You marked it out. You mark this candlestick out. Remember, we're marking out the high and the low of it. Now, anyone that gets swept, we're trading in the opposite direction of it. Since the sell side liquidity was the first that got swept, then we are pushing to the upside. Do you understand? We are pushing to the upside. So let's take this out. It's not necessary for now. And yeah, after this, we're going to our 15-minute time frame and then we'll look for our entry. Now, with one confirmation, which confirmation are we talking about? The modern one confirmation. The modern one confirmation is very strong enough that if you can be able to learn it, master it, your win rate is going to increase, because trading the model 1 confirmation only will be more faster than anyone trading the break of structure, change of character, breaker block, mitigation block entry. You understand? If you're waiting for that block, you're waiting for FVG, someone with a model 1 confirmation will be far ahead of you. So for you to be 2 steps further than any other person, you need to learn about this particular model 1 entry. Now let's talk about that. Go down to your 15-minute time frame. Now this is a buy entry, okay? This is a buy setup and a buy entry. Now watch this. I want you guys to watch this. Watch very closely. Very, very closely. This was the candlestick that causes this particular sweep, right? This is the candlestick that we marked. This is the low of the candlestick that we marked, and the high should be somewhere around here or here, I think. Yeah. And this was the candlestick that caused this particular, this was the candlestick that causes this particular liquidity sweep, guys, right? Yeah. So after that, what next are we going to do? What is our model 1? Since this is a bearish liquidity sweep, we're looking for a bullish entry. Now, we are marking out the high of this particular candlestick. After marking the eye of that candlestick, what are you waiting for? We're waiting for any candlestick that will be able to break above here and close above it. As easy as that. There must be a break, and there must also be a close above it. Now this is our break. First of all, this candlestick tries to break past it, but it declined and closed inside. The second candlestick did its job exactly as we wanted. It opens, move above it, and closes above. You can see open low and close high. You understand? So after candlestick closes above this our marked model 1, this shows that this particular model 1 is 100% accurate. But if you see this decline, it is not accurate. Okay, if you see this decline, it is not accurate. But if you see a closes above it, then that means that it is what? It is accurate. So what are we going to do? We'll start stacking in our entry. No time to waste time. Our buy entry from here. Where are we targeting the next draw in liquidity? I've been saying about drawing liquidity, drawing liquidity, drawing liquidity. I've been preaching about drawing liquidity. Our stop loss ought to be below this model 1. Yes, because that's a perfect place to be below this model 1. That's where our stop loss should be. Why? Our take profit should be in the nearest draw in liquidity. Where's our draw in liquidity? This is our nearest draw in liquidity. Why are we calling this draw in liquidity? You can see this move. Price is just moving gently, moving gently. All of a sudden, price starts pulling down, pulling down. What are you calling this? This movement is called what? It's called liquidity pool or liquidity void. You can be able to take the 50% of this liquidity void. Okay, as simple as that. You're supposed to know this by now. So you take this out. That should be our target. Here should be our target. Giving us a clean, better risk to reward ratio. That should be our target. As simple as that. Remember the entry we use, our model 1 entry. That is the only confirmation you need. You do not need any FVG, order block, Fibonacci 2, MACD, moving average. Name them. You don't need other shit entries, okay? You don't need other shit confirmations. You don't need the bearish engulfing candlestick, morning star, shooting star, afternoon star. You don't need that. This model 1 is very valid. Once the break happens and the closes above it happens, then just know that your model 1 is what? Is valid. Now, let's see how it's going to play out. If you master the game very well, you are going to be successful. Most mistakes some trader does is that they do not wait for the confirmation. Once you just see the model 1, boom, they are in. They are in. They do not wait for the retracement. They do not wait for the closure. Now you can see where it eats our take profit. As easy as that. TP what? TP smashed. You can do this in 5 different pairs. That is the brain profitability in it. You can do this in 5 different pairs. Imagine catching 1:7 risk reward ratio in 5 different pairs in a day. You are profitable because with this strategy, you can't lose 5 times in a row. You can't. You understand? So let me show you guys a sell this thing. A sell example. Okay guys, now this is a sell example. The other one was a buy example. This is a sell example of how to get your confirmation from the model 1 entry confirmation pattern. Now this is a bearish candlestick, and you can see this is our 4-hour time frame. We mark out our high and we mark out our low. What do we say? Price swept above it, which means that we are doing what? Which means that we are going down. We are selling. That is what it means. It means we are selling. Do you understand? So what next? You go down to your 15 minutes time frame. In the 15 minute time frame, what are you looking for? First of all, you're looking for that particular candlestick that causes that particular purge. The candlestick that purges that particular movement. That is what we are looking for. Do you understand? So now, looking at it from here, you can see that this is the candlestick that causes this movement. This is the candlestick here. This is the candlestick that causes this liquidity sweep above. This is the high, and this is the candlestick that causes the liquidity sweep above. Then you mark out below of it. This should be our model 1. Our model 1. After marking it out, what are you waiting for? Waiting for a break below it and a close. The first candlestick tries, it breaks below it, but it didn't close. It rejected. The second candlestick came, break below it and did what? And closes below it. Then what happened? This alone validates our model 1 entry that we marked, showing that this confirmation is valid. As easy as that. Then we start stacking in our what? Our sell positions from here. Our SL should be here, and our TP should be where? In the next draw in liquidity. Draw in liquidity again. Understand draw in liquidity and you be catching 1:5, 1:6, 1:7 risk to reward ratio without even fearing. If you can be able to understand the draw in liquidity, you understand? If you can be able to understand that, you can be making money swiftly. So let's watch. What's our nearest draw in liquidity, guys? Pick. Are you picking here, or here? Are you picking here? Are you picking here? Are you picking here? Or should we use our Fibonacci tool to measure and know which one is in a premium or discount? I'm sorry, I'm joking. We are not using anything like we're not using any indicator. We're not using any indicator. The only indicator we'll be using is our lines, this line, and this our risk to reward ratio. That is the only indicator we'll be using. We're not using any other indicator. Do you understand? So these are done liquidity here, and we are expecting price to do what? To boom and take us to TP without allowing us to make noise or without even quarreling with us. Do you understand? As easy as that. Don't need anything to you don't need any other validation. You don't need any 90% open or close of the moving average. You can see it. We're already there. TP smashed. After the model 1 was tapped in, TP smashed. Now, some mistakes that most trader does is that they do not wait for the retracements. They'll just enter after they see this particular. Let me show you. After they see this particular close, they'll just enter from here. No. Don't do that shit. Don't do that. You need to wait for a retracement. You understand? You need to wait for retracement. Once you wait for retracement, once there's a retracement, then you start entering from here. Okay? Always wait for retracement. Don't just enter without retracement. That retracement shows that yes, this break will show that this area is validated, it is strong. Then the retracement will now show that yes, we are ready to do what? To move. Then it will now reverse, tapped in, and start pulling to the downside. As easy as that. You don't need any other valid entry, or you don't need any other smooth sayer to tell you that this is valid or not. Do you understand? Okay. So now, you guys may be asking, why did this really work? Why does it work? Or blah blah blah. See, let me tell you something. This particular thing shows the real intent in the market. It shows who is in charge. If the sellers are in charge or the buyers are in charge, it shows it everything in the market. Once you see that close, that break and close, then that shows that if neither it to the upside or neither it to the downside. Once there's the close above, once there's a break above and a close, that shows who is in particular in control. Now, in this particular example, the bearish people, the sellers, are in control because you can see this is a bearish movement that breaks below and closes. In that first example, the buyers are in control because it breaks above it and did what? And it closes. Simple as that. It shows you who is in control, and it filters fake moves. Fake move like this. This is a fake move. Okay, this is a fake move because this is just a sweep. You can see it here. Price just sweep below it and start rejecting sharp. Some of you guys might even see it when price was here and start stacking in your sell. You might get stopped out. Okay, you might get stopped out, guys. Don't do that. Okay, wait for a clear break and a clear structure. Don't enter a sweep. Do you understand? Okay, and it keeps you patient. You need to be patient. This strategy will make you to calm down. Wait for everything to align. Everything needs to align for you to know that yes, you are in the market or we are going to make profit from it. Okay, and again, it improves your win rate. No matter what, your win rate will surely improve. If you are trading 1:5 before, 1:6 before, 1:7, or as 1:5, if you are trading 1:2 before, 1:3 before, if you understand how the drawing liquidity works, you'll be able to catch 1:7, 1:8, 1:9. Because price, as I said before, price moves in towards liquidity where there is money. If you understand liquidity, drawing liquidity, you're going to understand the next market move, and there is where you're going to set your stop loss. I have the PDF about drawing liquidity. Join my Telegram channel, chat me up on Telegram, and we are going to discuss on how I'm going to give you that particular PDF for you to be able to learn everything about drawing liquidity. The particular PDF shows everything about drawing liquidity, order flow, and so many other stuff you need to know about CRT. everything is in that particular liquidity. I also have another liquidity about SMC. Everything you need to know about SMC from the beginning of the market structure creation to down to kill zones. Everything you need to know about SMC. I also have the PDF. And everything you need to know about candle theory. I have every PDF you need to know. Okay, these are courses. These are courses that I calm down and I wrote them gently, explaining it bit by bit to avoid confusion. Even a 2 years old can be able to understand each of my PDF. Okay, it took me time and sweat to be able to compile all this stuff into a particular PDF. So don't expect it to be 1 page or 2 page or 3 page. We are talking about 20 pages here, 15 pages here. Okay, now if you take one thing or if you learn anything from this video, just like, subscribe, okay, comment which video you want me to treat, comment it, and I'm going to surely talk about that particular video. Okay, so make sure you share to your friends, and don't forget to join my listing. Don't forget to join my Telegram channel for more sweet trade. See you guys next time.